Welcome to our CFP exam prep discussion on estate planning process. Today, we're diving deep into a crucial topic that often challenges test takers. Let's break down the estate planning process into its core elements. The process fundamentally consists of four key components: accumulation, management, conservation, and transfer of wealth. Many candidates mistakenly focus solely on the transfer aspect, but the process is much more comprehensive. Starting with accumulation, this phase involves building wealth through various means, such as investments, business ownership, and retirement accounts. When studying for the exam, remember that accumulation questions often integrate with other domains like investment planning and retirement planning. A common exam mistake is failing to recognize how pre retirement accumulation strategies directly impact estate planning outcomes. The management phase is where many test takers stumble. This involves actively overseeing and growing the accumulated wealth. The exam frequently tests scenarios where candidates must evaluate different management structures like trusts, family limited partnerships, or corporate entities. For example, you might encounter a question about whether a family limited partnership or a living trust better serves a client's estate planning objectives. Conservation is particularly tricky on the exam. This phase focuses on protecting assets from various threats, including taxes, creditors, and market volatility. Pay special attention to questions about insurance products and estate planning. Many candidates miss points by not recognizing how life insurance can be strategically used within irrevocable life insurance trusts to provide liquidity for estate taxes. The transfer phase is where the exam really tests your technical knowledge. Remember that transfers can happen during life or at death. The exam often presents scenarios where you need to determine the most tax-efficient transfer method. A classic example is choosing between an outright gift and a grantor retained annuity trust for transferring appreciating assets. Here's a crucial point that frequently appears on the exam. The estate planning process must always align with three objectives: legal, tax, and personal. Many test takers focus too heavily on tax minimization while overlooking personal objectives. For instance, a question might describe a client who wants to minimize estate taxes but also ensures their children don't receive their inheritance too young. The correct answer often requires balancing these competing objectives. One of the biggest mistakes candidates make is compartmentalizing estate planning concepts. The exam intentionally integrates estate planning with other domains. You might see a question that combines estate planning with retirement distribution planning or business succession planning. Always consider how these areas interconnect. Another common error is misunderstanding the timing of the estate planning process. It's not just about death time transfers. The exam often tests scenarios involving lifetime gifting strategies, generation skipping transfer tax planning, and charitable giving techniques. Remember that effective estate planning is an ongoing process that requires regular review and updates. When studying, focus on understanding how different estate planning tools work together. The exam might present a scenario where multiple techniques could work, but you need to identify the most efficient solution. For example, you might need to decide between using a qualified personal residence trust or a sale to an intentionally defective grantor trust for transferring a vacation home. Remember, effective estate planning isn't just about minimizing taxes. It's about creating a comprehensive plan that achieves all client objectives while maintaining flexibility for future changes. Keep these concepts in mind as you prepare for the estate planning portions of the CFP exam.